Hello everyone, it's Stephen Whiteside here from theuptrend.com with this weekend's edition of Protect Your Portfolio. Well, I won't try to keep you too long today. We'll start off by looking at the VIX, or the Fear Index. It came down nicely on the week, closed below the previous week's low, but did not generate a new sell signal. That would happen this Friday with a close below $24.96. Now, continuing with some weekly charts, starting off with the SPDR ETF for the S&P 500. We were up 6.62% on the week, closed above the previous week's high. We also filled a weekly open gap. There are daily and hourly gaps still to be dealt with. Looking at the Qs for the NASDAQ, we're up 7.46%. Now, at the other end of the scale, the TSX was only up 0.93% on the week after making a new weekly low. Of course, the reason for the weakness in the Canadian market was weakness in commodities. We had crude oil trade down to the lower channel line, down nearly 3% on the week. We saw the natural gas continue to move lower, down a little over 10%. Copper made a new low for this move, down over 7%. And unfortunately, gold is still stuck in a range between $18,1250 and $1875, down slightly on the week. Now, if you want to be bullish, this is the time of year to be bullish. We're coming up to month end. We're coming up to a 3-day long weekend on both sides of the border. We're also at the time and place where the market often makes a low and starts to move up into a summer rally. Now, we showed this chart last week. Of course, we've moved a week ahead, and we saw the U.S. markets move up sharply on Friday. Unfortunately, you can be bullish, but you've got to remember that you're being bullish at a time and place where we just made a new low for the year for the TSX. We made a new low last week for the U.S. markets. We're in a bear market. A recession is upon us. Inflation is still an issue. The Fed has said they're going to fight inflation, and there's an old rule in the stock market that you don't fight the Fed. So while we can have a bullish period in the market, it isn't going to change the long-term direction of the market anytime soon. And as we start to move up, there are a lot of gaps in individual stock charts and in the major indices that the market still has to deal with. So just be aware of that. Now, if you don't know what I'm talking about when I mention a gap is a pothole in the market. It is formed when the market cannot agree on a price. Markets only function if there is price agreement. In periods in which there is no price agreement, you'll see the market either gap higher or gap lower. You have to think of that as the market creating a pothole. And you know what potholes are like. When you drive towards them, you try to avoid them. If you happen to hit one, you know what damage it can do to your car. Well, the market has a memory, and it knows where those potholes are and remembers that the market could not come to agreement on price previously, and so the market gets leery anytime it's getting close to a previous pothole. Looking at some daily charts just for the TSX and the S&P 500 SPDR ETF. We're looking at the iShares for the TSX 60 here, and you can see since the last time we had an early warning signal, the market started to roll over. Here we are at the bottom of the panic zones. A pressure zone is forming. This is certainly the time and place where you want to look for a buy signal. Unlike the U.S. market, we didn't move up enough on Friday. We made a new low on Thursday. And we moved up just 1.74% on Friday. Still looking for a close above 29.88 on Monday. If that doesn't happen, that upper channel line is going to continue to move lower daily. Now I'm going to walk through some upside targets, and it's a little repetitive, and I apologize for that. But we're going to use different techniques to look and see just how high the market could go in a bear market rally. Remember, we're not looking for higher highs here. In fact, we're looking for lower highs. And because we don't think anything fundamentally is going to change over the next month or two, we're looking for a bear market summer rally. Now, one of the first tools a lot of traders will use is Fibonacci retracements, and I've just mapped it out for the iShares for the TSX 60. We go back to the recent high, map it down to the recent low, and then we can calculate out a 25% retracement, a 38.2% retracement, a 50% retracement, and then a 61.8% retracement. So we could go all the way up to 61.8 and still not make a higher high. And that's important to remember. The first line that we have to cross is the 25% retracement level, which is at 29.98, and 29.98 is just above the previous month's low, and then 2 pennies away from $30, which of course is a huge area of psychological resistance. Remember, what was support on the way down can often act as resistance on the way back up. Now, if we just copy the length of the move up and the distance of the move up of the previous up move and map it out, that takes us all the way up to $31. And so that is certainly realistic as well. If we start getting over $31 can come into play. And then, of course, if we just look at our price target line, if we do get a buy signal this week, I'm going to ask you to look 2 lines up. And 2 lines up takes us up to 31.25, which is pretty close to the top of that open gap. And 31.25, that takes you right down to the bottom of the flypaper channel. And you can see that nice trend line coming down. Remember, this is going to happen over here. And these lines are going to continue to move lower. And then, of course, we've got our moving averages. Now, notice the 50-day moving average is right at $31 and just breaking through it. And that could hold the market in check. And then we've got the 100 and the 200-day moving average coming down. So over the next week or two, those are also going to move lower. So a summertime high of 31.25, that is certainly doable, and that would not give us a new higher high for the Canadian stock market. Now let's do similar analysis on the US market using the SPDR ETF for the S&P 500. Again, we're at the bottom of the panic zones. We made a new low. We had a nice pop on Friday. I would say that a lot of it was short covering going into the weekend. Now we need to see if we're going to see additional new money come into the market and try to move it up from here. We have moved all the way up to our 25% retracement level. We're less than $1 away from hitting it, and we should be able to do that on Monday. Now, the next big target is not the Fibonacci target or our mathematical target. It's actually the $400 level. So our next Fibonacci target is 406.04. Our next mathematical target is 406.25. And so to get there, we've got to get through $400. That could be hard to do. Of course, if we get up to the 406.25 level, that takes you up into the bottom of the flypaper channel. It also starts taking you over the 50-day moving average, which you can see held us in check last month. So the 50-day moving average is right there at $400 at the moment. So it could be hard to get over $400 at the current time. And just looking at targets based on previous movements, if we take this movement from earlier in the year and then we map it to this movement, you can see they're pretty much exactly the same. And then if we map it to this recent low, you can see we get up, but not above $400. That's what this line here is. That's $400. And then if we take the big rally that we had a couple of months ago and then map that to this recent low, that takes us right up to $400. So those are legitimate targets to the upside. 400 to 406.25, and then above the 406.25 level is the high from last month. So that's where I think the market's going to be able to go at this time, unless some new bad news comes out over the next couple of days. Now, looking at the Bitcoin and Ethereum, nothing going on here for either, so we'll finish off the presentation looking at those cryptocurrencies. Really no reason to get excited about them at the present time. Okay, folks, that's all for this weekend's presentation. Obviously, we're set up to move higher from here. How high we move is yet to be determined. Not overly excited at the present time. It looks to me like this is just going to be another bear market rally. It certainly started off nicely on Friday, but a lot of that is short covering, so we really need to see if new money comes back into the market this week. Enjoy the rest of the weekend. Next time you'll hear my voice is on Tuesday morning.